Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings. Today we're diving into a Form 8K. Don't worry if that sounds like alphabet soup. Let's just say it involves a company selling its own stock and sharing some financial news. What could possibly go wrong? This is a report from MultiSensor AI Holdings, and it's a snapshot of important events that investors should know about. Think of it as a corporate alert system. The date on the report is March 28, 2025, so this is pretty recent news. First up, the company has entered into an agreement to sell shares of its common stock, which is basically ownership in the company through an at-the-market offering. They've partnered with B. Riley Securities, Inc., who will act as the sales agent. The company could potentially sell up to $8,625,000 worth of stock. What does at the market mean? Basically, they'll be selling shares directly on the market, like the Nasdaq at the current trading price. It's a way for the company to raise money over time. They aren't required to sell any specific amount. They hope to sell for a good price depending on what people are willing to pay. There are some rules in the agreement. The agent will get a commission. The company also promises that it will cover the agent for losses under certain circumstances. It's pretty standard stuff. The company mentions they'll use the money raised for working capital and general business needs. Think of it as keeping the lights on and maybe investing in new projects. This stock sale is happening under a pre-existing agreement with the SEC that makes it easier for companies to sell stock over time. It is called a shelf registration statement. It's like having permission to sell stock whenever the company needs to, up to a certain limit. That limit in this case is linked to something called General Instruction IB6 of Form S3, which puts a cap on how much they can sell based on the size of the company. The company also includes a legal opinion about the stock sale, which is pretty standard. Scroll item 2.02, results of operations and financial condition, and scroll gets the company also released its financial results for the last quarter of 2024 and for the whole year. You can find the details in the press release, which is attached to this report, but here's the catch. These financial details are being furnished, not filed, with the SEC. That means they aren't held to the same legal standard as some other parts of the report. The filing also states that MultiSensor AI Holdings Inc. is an emerging growth company. This is relevant because emerging growth companies have less strict filing obligations. Now let's talk about the opinion. Based on the filing, the company is taking advantage of a relatively simple way to raise capital through an at-the-market offering. This can be a good move if they believe their stock is undervalued or if they need cash quickly. However, it also dilutes existing shareholders because there are more pieces of the pie being handed out, and selling stock is diluting the ownership of everyone who had it beforehand. The key will be whether they can use that money wisely to grow the business and increase profitability. Their stated intention to use the funds for working capital and general corporate purposes isn't exactly specific, so it will be important to watch how they actually deploy that cash. The fact that they are furnishing, not filing, their financial results should also give investors pause. While it's not necessarily a red flag, it does mean those results are subject to less scrutiny. Investors should dig deeper to understand the company's financial health beyond the press release. Ultimately, this filing tells a story of a company that is still in the growth phase and is looking for ways to access capital. Whether that story has a happy ending depends on the company's ability to execute its strategy and deliver results. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate decoding.